Most people think the next global conflict will look like the last ones. Ships, sanctions, blockades, oil tankers stopped at sea. They're wrong. The real conflict has already begun, and it's not being fought with missiles. It's being fought with balance sheets, currencies, and patience. What started as an oil enforcement action is now evolving into a full-scale currency war. And almost no one is paying attention. Let's start with the spark. When the United States moved to restrict Venezuelan oil exports, it wasn't just enforcing sanctions. It was sending a message that said, we control the arteries of global energy. For Washington, this was routine. Naval patrols, shipping pressure, insurance risk, compliance through uncertainty. This is how modern power is projected, not by firing shots, but by making the cost of disobedience unbearable. But from Beijing's perspective, this wasn't routine at all. Venezuela isn't just another supplier. It's a discounted, strategic energy source, one that feeds Chinese refineries, one that cushions China's industrial machine from volatility. So when the US squeezed that flow, China didn't see sanctions. China saw a direct threat to energy security. And energy security is national security. Here's where most analysts get it wrong. They expect retaliation to mirror the attack. US uses ships, China responds with ships. US pressures oil, China pressures oil. That's not how Beijing thinks. China understands something fundamental. It cannot win a symmetrical military contest with the United States, not ship for ship, not base for base, not patrol for patrol, so it doesn't try. Instead, China shifts the battlefield from the ocean to the financial system, because that's where America is exposed. Let's talk about the US strategy for a moment. America's power rests on two pillars: military reach, financial dominance. The Navy enforces compliance, the dollar enforces settlement. Together, they allow the US to project power far beyond its borders. But here's the catch. That power is extremely expensive. Carrier groups cost billions to operate. Sanctions enforcement requires constant surveillance. Global presence demands endless spending. And all of it is funded by debt, deficits, treasury issuance, dollar creation. Every enforcement action adds strain. Every show of force deepens the fiscal hole. This is the contradiction at the heart of American power. The more aggressively it uses the system, the more fragile that system becomes. China knows this. And instead of challenging the Navy, it challenges the currency foundation underneath it. This is where the response begins. Not with announcements, not with speeches, not with threats, but with quiet financial adjustments. China allows the yuan to appreciate, slowly, deliberately, incrementally. To most observers, this looks insignificant. A few basis points here, a controlled move there. But strategically, it's profound, because currency appreciation does four things at once. First, it attracts capital. A stronger currency signals confidence, stability, control. Global investors notice. Funds begin reallocating, not all at once, but steadily. Capital that would have flowed into dollar assets now considers Chinese ones. Second, it undercuts US narratives. For years, Washington accused Beijing of manipulating its currency lower, exporting deflation, gaining unfair trade advantages. A strengthening yuan destroys that argument. It flips the script. Third, it increases purchasing power. A stronger yuan buys more commodities, more energy, more metals, more assets. China can acquire real things with relatively cheaper currency. Mines, infrastructure, gold, strategic resources. This is not theory. This is already happening. And fourth, it signals a strategic pivot. China is no longer optimizing purely for export competitiveness. It is optimizing for financial resilience, for leverage, for insulation from dollar pressure. This is the part that matters most. China is not trying to replace the dollar overnight. It doesn't need to. All it needs to do is weaken the dollar's exclusivity, because US sanctions only work if the dollar system has no alternatives. Once trade can settle elsewhere, once reserves diversify, once capital has other homes, the enforcement power collapses. This is the real response to the Venezuelan oil squeeze. Not retaliation, not escalation, but erosion. Erosion of the financial monopoly that makes sanctions effective in the first place. And here's the irony. Every time the US uses its physical power, it accelerates this process. Every sanction, every blockade, every enforcement action. It sends a signal to the world, you need an exit, and nations listen. They diversify reserves. They sign bilateral trade agreements. They experiment with alternative settlement systems. They accumulate real assets, not because they want conflict, but because they want protection. This is how systems change, not in revolutions, but in quiet adaptations. The oil enforcement was the spark. The currency response is the fire. And this fire spreads slowly, but relentlessly, because it doesn't rely on shock. It relies on incentives. The US still has immense power. That hasn't disappeared, But its margin of error is shrinking. Debt levels are higher, deficits are structural, interest costs are rising. Every projection of force now has a financial cost that compounds. China doesn't need to defeat the US. It only needs to let the system strain itself. And that's why this conflict won't look dramatic on the surface. No headlines screaming currency war. No emergency summits, no formal declarations, just gradual shifts, portfolio reallocations, trade agreements, reserve changes, until one day, the system behaves differently and people realize the center of gravity moved. This is not about Venezuela. Venezuela was the trigger. This is about the future of power, whether dominance is enforced through force or maintained through trust. And that battle is just beginning. If you want to understand where this is heading, you have to stop thinking in headlines and start thinking in systems. Because systems don't collapse all at once, they decay. The dollar system was built on 3 assumptions. First, that the US would remain the safest place to store capital. Second, that global trade would default to dollar settlement. Third, that enforcement power would never be challenged. None of those assumptions are being attacked directly. They're being worked around. That's the brilliance of the strategy. When China allows the yuan to strengthen, it isn't trying to shock the system. It's trying to change behavior. And behavior changes slowly, until suddenly it doesn't. Let's talk about reserves. Central banks don't move fast. They don't speculate. They don't chase trends. They watch. They assess. They hedge. For decades, holding dollars was the safest hedge. But safety depends on predictability. And predictability erodes when sanctions become routine, when assets can be frozen, when access can be revoked. The Venezuelan oil enforcement wasn't just about oil. It reminded every country watching that access to energy, trade, and capital can be politicized. So what do rational actors do? They reduce exposure, not dramatically, not all at once, but deliberately. A few percentage points here, a small allocation there, more gold, more regional currencies, more bilateral settlement. Each move seems insignificant, but together, they alter the system. This is how the exclusivity of the dollar fades, not through collapse, but through competition. And competition is something the dollar system has never had to face. Now let's talk about credibility. Power enforced through force is expensive. Power maintained through trust is efficient. China understands this distinction. By allowing the yuan to appreciate, it signals restraint, discipline, control. Those signals matter. They attract long-term capital, the kind that doesn't flee at the first sign of volatility. This is why the conflict has shifted domains. The US excels at shock. China excels at endurance. One relies on speed, the other relies on patience. In financial systems, patience wins. Because leverage always breaks first, and right now, the US is more leveraged than it has ever been. Debt to GDP at historic highs, deficits baked into policy, interest cost consuming fiscal space. Every military action adds pressure. Every sanction accelerates diversification. This is the paradox. The more aggressively the US uses its power, the faster the power becomes less effective. China doesn't need to respond forcefully. It only needs to let the system reveal its own limits. This is why the yuan strategy is so dangerous for the existing order. It doesn't provoke, it doesn't threaten, it doesn't escalate. It simply offers an alternative. And alternatives are contagious, especially when trust in the incumbent weakens. The US still controls key choke points. That hasn't changed. But control is not the same as legitimacy. And legitimacy is what underpins reserve status. Once doubt enters that equation, everything changes. This doesn't mean the dollar disappears. It means it shares space. And when it shares space, its power is diluted. Sanctions become less effective. Debt becomes more expensive. Influence becomes conditional. This is the future being shaped right now, not by dramatic confrontation, but by quiet recalibration. The oil war was visible. The currency war is subtle, but make no mistake. The currency war is far more consequential, because energy conflicts affect prices. Financial conflicts affect systems. And systems define decades. What we're witnessing is the beginning of a multipolar financial order, not announced, not declared, but emerging. One where power is exercised through credibility, through stability, through optionality. The US still has immense advantages, innovation, markets, institutions, but advantages erode when taken for granted. And right now, the world is learning to live with options. The Venezuelan oil move may have seemed tactical, but its consequences are strategic. It accelerated a process already underway, a process where nations ask, what happens if access is cut? What happens if rules change? What happens if compliance becomes coercion? And once those questions are asked, they cannot be unasked. This is the real shift. Not a collapse, not a crisis, but a rebalancing. From singular dominance to contested leverage. From enforcement to persuasion us. From force to finance. History doesn't announce turning points, it reveals them in hindsight. And when people look back on this period, they won't remember a single battle or a single sanction. They'll remember when the world stopped assuming and started preparing. The oil war was the spark, the currency war is the fire, and the outcome won't be decided this year or the next. It will be decided by discipline, by credibility, by patience, because in the long game of global power, the side that controls trust controls the future.